Chuck Sievertson, ABC News, New York.
Professor Alan Berger with the Moore School of Business at the University of South Carolina joins us now just to provide some perspective. Thank you for joining me today. So let's get right to it. Do we have to worry about the cash stored at our banks?
Actually, a very good question. The answer is no. We don't have to worry about it, but let me provide a little bit more background. So the FDIC insures all deposits up to $250,000. And you can actually have more protection than that if you have multiple accounts. A husband and wife can have $250 each. They can have another account together for another $250. You can have $750 if you want. Most of us don't really need to worry about that very much. And that's in normal times. Since the Silicon Valley Bank collapse, it's actually even safer because for the next year, all uninsured deposits are now effectively insured. They're not legally insured, but they've sort of guaranteed we'll have access to our money. So you don't need to worry about that. And it can be a nuisance if your bank fails. You'll get your money, but it might not be as easy. You might have to wait for a payment from the FDIC or something like that.
And Professor, were there any warning signs with the bank collapse before it happened?
Anyone with any knowledge of this bank, including the management, the supervisors, the big venture capital firms that were trusting it, should have very easily figured out this problem. The Silicon Valley was having a little bit of a problem. Tech industry was having some problems, laying off workers, and everybody knew that the deposits would go down. Everybody knew the Federal Reserve was raising interest rates, so there's interest rate risk from having long-term Treasury securities, unless they're offset by long-term assets, which they're not, but long-term liabilities. So they were taking a lot of risk that way. Should have been realized. Somebody didn't find it out. A lot of people didn't find it out. It is a bailout. These uninsured depositors who didn't pay for the extra protection they're getting extra protection for their deposits over $250. They didn't pay for it in advance, like a regular insurance contract. They're getting this ex post facto, after the fact, not to the fact. That's a bailout.
So you're saying don't take your money out the bank and put it under your mattress in your home?
Definitely not. If you are worried about the nuisance effect, with a small probability your bank might fail, very easy solutions are just put your money in one of the very largest banks, and then that will never happen.
All right, sounds good to me. Professor, thank you.
Thanks very much. Appreciate it.
U.S. regulators are cracking down on text messaging scams.